A lot of people go out there and start a business, you guys. This episode is going to be crazy because one thing when you start a business is you want to like maybe get that first paycheck. You want to go out there and crush it and build a company that you can be proud of, right? But what most of us learn eventually is that we actually need to build something that we can pass on to our children. We want to build wealth. And my guest today is going to help us understand not just how to start a business, but actually how to build that business into something of great value. Not just a little bit, but we're talking millions. You're not going to want to go anywhere.
So the big question is this: how can we achieve financial freedom, quit the 9-to-5, and live a mighty life? That is the question. And this show will give you the answer. You are listening to The Mighty Mike Show with your host, Mighty Mike Reed.
All right, you guys, welcome back to the show. We have the wonderful Wayne Zell on the show today. Welcome, Wayne.
Thanks for having me, Mighty Mike. What a great show you've got. I love your intro, by the way. It's very, very upbeat. Gets me going.
Thanks, man. It's a marketer's perspective. You know, we want things to be fun and engaging right away, getting going. So awesome.
Absolutely.
Well, why don't you take just a minute? I know we talked a little bit before the show, and but I want my viewers to and my listeners to hear it directly from you because you have so much experience, and you have so much to offer. Take just a minute though, and tell us a little bit about you and your personal life.
Yeah, thank you. I've been doing what I do for 44 years now, so I'm an old guy. I've got a lot of experience, a lot of stories to tell. I started out as a CPA, a tax accountant, way, way back in 1980, and continue to be a CPA, specializing in tax. But from that point, I got involved in estate planning and corporate work, and I have my own law firm. It's called Zell Law. We're in Reston, Virginia. I've worked in many different law firms. I've worked for many different bosses, and I realized as a result of that, I am an entrepreneur and I represent entrepreneurs. So that's
so cool.
That's kind of my story.
It's really is a tribe, you know. Entrepreneurs, we're a cut, you know, off the cloth that we're just not like everybody else, and we do things different, and we actually usually, I don't know if you'd agree with this, but we learn the hard way.
You know, I've made a lot of mistakes. I continue to make mistakes, but I don't look at them as failures. It's just learning. So that's what entrepreneurs do too. If they approach it with the right attitude, you can learn so much from trying and experimenting and doing it over and over again, but not doing the same thing wrong over and over again. That's a sign of insanity, right? But the beauty of what we do is we're always learning from other people and from our own efforts. And it's, you know, I'll be doing this until I can't do it any longer, because I love it.
Well, I tell you, when I looked at your LinkedIn, I was like, wait, this guy's booked on my show? And I'm like, this guy guiding entrepreneurs over 5 million in revenue to a multi-million-dollar exit. And I thought to myself, I want that. Like what I'm going to pick this guy's brain. I want to take my company, one of my companies, hopefully one of them, and do this exit. So I definitely want to dive in on the strategy, but I want to do my viewers justice. They love hearing how you got started. I know you've been in it for a long time, but what made you decide law, and what made you, wasn't there an opportunity at some point where somebody was like, no, just work for me. I'll pay you a decent wage and you can just forget about your future and your dreams and all that. Like, how'd you get started? Why are we here today?
Oh, wow. I mean, when I was in college, I went to the business school at University of Virginia. It's called the McIntire School of Commerce. It's a very good school today. I don't think I'd be able to get into it. But back then, back in the 1970s, I wanted to be a musician and a performer on stage. And so that's what I told my dad. We were on our way back from college after my first year. He said, "What are you going to major in?" I said, "I'm going to be a double major, Dad. I'm going to major in music and acting."
That's so cool.
Got really quiet in the car. And then, a minute or two later, he said, "So how are you going to pay for school?" I said, "What do you mean? Isn't that you paid for my brothers? Aren't you going to pay for me?" He said, "Well, frankly, you need to have something that you can fall back on when you get out of school." So he said, "You need to go to the business school and you need to get your accounting degree." Accounting. Oh, I sat in my first accounting class. I hated it. I was falling asleep all the time. The teacher was horrible. And then finally, it dawned on me that this is the language of business. Accounting is the language of business. So I really poured myself into it, got really good at it, graduated, went to work for Arthur Anderson and Company out of college, which was one of the biggest accounting firms in the world at the time. And I went straight into the tax department and surrounded by a bunch of lawyers, not just, CPAs, but lawyers. And what became apparent to me was that my 4 years of undergraduate, I really hadn't learned how to write like a lawyer or like, a professional. And I was struggling with that. And I went to my dad again. And he said, you ought to go to law school, because if you really want to learn how to write and analyze things, go to law school. You'll learn how to do it. I said, okay. I really had no direction, because my heart was set on music and acting. I'm a musician on the side, and I like to do that still to this day. So I went to law school again. I got there and it was like, oh, I hate this. This is horrible. It's reading cases from the 1900s and the 1850s and trying to make sense out of all this stuff. And I had not had any kind of training in English literature or anything like that in college. Turned out I learned how to write in law school. I got to be a very good writer. And again, I immersed myself, really working on my left brain, the analytical side of my brain, because my right brain was really creative, and I still am to this day. But the left brain was, in need of more work. And so I kept working at it, got very good in law school. And then I became a lawyer right out of law school. And between working for law firms and working for CPA firms, big and small, I really learned the craft. And so I'm a tax lawyer that specializes in estate planning and business planning. And I've, helped over 160 companies be sold over my career. And I probably have helped over 1,000 entrepreneurs. And we have, today, to this day, we have over 5,000 clients that we work with in our firm, a small firm, a boutique firm. But what I did learn was, at one point, I was the CFO and general counsel of an internet startup in the late 90s that was backed by George Soros. It was a spinoff of the old search engine company, InfoSeek. So I have worked inside companies, but when you're working for somebody else versus yourself, it's a different feeling altogether. And I love working for myself, and I love having people work for me, but I love working for myself and really calling the shots, being autonomous, being creative, trying new things, experimenting. Sometimes these experiments work, sometimes they don't. And then helping the entrepreneurs who are doing the same thing. And it's in all different industries. I mean, we work with technology companies, government contractors, real estate developers, you name it, restaurateurs, hotels, manufacturers, service companies of all kinds. And I've worked with all different industries. And what you learn is an entrepreneur is an entrepreneur. They always have this desire to succeed. The issue with the entrepreneur is they're always looking ahead. They're the visionary. They're always planning ahead. They're always working on their business, in their business, but they're not necessarily working on the business. And they need somebody like me to help make sure that they're planning for their exit, whether it's expected or unexpected. And that's why I wrote my book, Your Multimillion-Dollar Exit, which was published last year. And we've gotten some good kudos on the book. Entrepreneur Magazine named us one of the top 4 books of the year to read last year when it comes to entrepreneurship. And I'm really proud of that. And it's because it builds in stuff about starting your business, estate planning, how you link your estate planning to your business planning, how you plan for an exit, and how you plan for the unexpected too. So it was a passion of mine. It is a passion of mine. I continue to do that to this day. And I represent entrepreneurs of all shapes and sizes, and it's a lot of fun.
That's so cool. So there's so much to unpack there, but I'll start with, so first of all, having parents that care enough to tell you, cool, that's your dream. You could do that, but you're going to need to also support yourself at some point.
I think it was wise. It was really smart.
And then too, like the idea that you go down a direction of learning that suits where you, like a lot of people would say, why go into law school if you're bad at writing? Partner with someone who's good at writing. boom, or whatever, or
I
but then
wasn't bad at writing. I was just a creative writer. So I used to write lyrics to songs that I wrote, and
um,
I've written, like 100 songs over my career. And back then, back in my teens and 20s and 30s, I was doing a lot of that.
mm,
Today, I'm just writing books and writing blogs and articles
yeah,
on technical topics. But
yeah,
back then, it was a challenge to get trained to learn how to write in a professional manner succinctly, so people could really understand. And I guess one of my talents is that I know how to make complex things understandable to entrepreneurs and everybody that we work with. And it's a God-given talent. Thank you. I'm very, very grateful to be able to do that. And
yeah.
it gives me an edge.
Well, you went after it, even though you actually listened to the advice of your father, and you went down that road, and you're better for it now. I mean, all these books and stuff like that. Have you thought about where your life would be if you would have been like, "No, Dad, I'm getting a job. I'll pay for my own school."
You know, I have thought about that. Occasionally we'll go back and think, well, what do I regret? Well, what do I appreciate? What should I have done differently? I wouldn't have done anything differently in regards to the getting the accounting degree and doing the law thing, because it really did give me a powerful set of tools
Yeah.
that very few people have. I mean, I have the accounting and the law that I combine, and the tax background. And every time I deal with a business owner, it comes up, whether it's income taxes or estate and
Yep.
gift taxes or whatever it is.
Yep.
We're always talking about forming new businesses, and how do we do it in the most efficient manner, the most tax efficient manner, and how do we save taxes in the long run. And unfortunately, taxes are an important part of all of our businesses today,
For
so
sure.
we got to know how to deal with it. And
Yeah.
so I look back and I don't regret a minute of the pain that I went through and becoming proficient at what I do today.
Yeah, the wealthy people that I know that have done really well, I'd like to call them friends, I guess, and that I've hung out with, and masterminds and networking meetings and stuff. They have a very strong focus on tax. Their decisions a lot of times, whether to buy a company, whether to sell it at a certain time, buying certain huge assets like planes or whatever,
Mm.
it's often related to tax. Almost every time it's like, man, you spent that much money. You're like, yeah, but I saved $30 million because of it, or whatever. And it's like,
Yeah. I
okay,
mean, I mean, the idea as a tax lawyer, tax accountant, the one thing you do learn if you do it well is you don't focus on the tax result exclusively. In fact, you really want to make sure that the tax tail doesn't wag the economic dog of your decisions, right? So you want to make sure that taxes are an important factor, and you always want to make sure that you're considering them and how you form your business, how you're planning to exit your business, and you want to make sure that you're looking at the after-tax impact of things.
mm,
But it's not the end all be all. So I had to learn, the corporate law side of it, securities law side of it, technology law. There's a lot of different things, real estate, that come into play that you really have to become proficient in order to advise your clients who are entrepreneurs, because they want to know not just about tax. You got guys and women who just do tax and they work for the big giant accounting firms like
yeah,
I did, but they're happy doing that full time.
yeah.
I like doing a little bit of everything, and the specialty in tax just gives me the ability to do a little bit of everything in a small business environment.
That's the entrepreneur in you.
Yeah,
That's yeah,
absolutely.
because I know people that I've partnered with that are not entrepreneurs. They have no interest. Like, for example, I have a website building company that's done pretty well. I don't really promote it a lot on here, but my partner, she's not an entrepreneur at all. And I'm like, did you know that we could set up our own payment processing and integrate that with all of our current customers and immediately just like turnkey make money? She's just like, no, that's a different business though. That's something else. Like, and I'm like, what do you mean? Like, and so but the entrepreneur in you needs variety. It needs the ability to go out and expand. That's pretty cool.
Yeah, that's why we actually, I mean, I have the law firm, but we set up a business called Aspire to Exit. And I went out last year and got certified as an exit planner, even though I kind of wrote the book on it. This is the book that I wrote. the exit planning is an art, it's a science, and then there are organizations that are devoted to certification programs. And so I took it, passed it. Now I'm an certified exit planner. Okay, great. What do you do with that? So I built a separate business that is not just law, and it's not just helping people with legal issues. It's helping people with all kinds of issues: valuation, HR, engineers, manufacturing, bringing in outside consultants who are finance experts. You name it, there's a wheel of expertise that we have to tap into if we really want to maximize the value of our business, depending on your business. And so I don't pretend to do all that stuff, but I have a lot of connections where I can bring in people to help them do it. And I'll play quarterback if necessary to get that person, that entrepreneur, to a successful exit, bringing in these outside resources as needed: investment bankers, business brokers, you name it. There's all kinds of people that have to be involved at various stages, and different types of lawyers too. You may need an environmental lawyer. You may need a patent lawyer. You may need a special real estate lawyer to help you through things. It depends on your business. And fortunately, I've built a nice network of people over my 44 years as an attorney, as a CPA, and 38 years as an attorney. So
a couple things I want to throw out there. So one is, are you a real estate business broker?
No, I don't broker deals. I'll bring in a broker if needed. I help clients who own real estate. I have several clients who are real estate developers. One of my clients is one of the largest low-income credit multifamily housing developers on the East Coast of the United States. Do I specialize in multifamily low-income credit housing? No, we have a lawyer who specializes just in that area of the tax code because it's so complicated. But I help him with his overall planning. I've got real estate developers, many real estate developers, commercial real estate, offices, multifamily, residential, but I don't do brokerage. But I know a lot of good brokers if you need to know somebody.
Well, I was going to ask you if you knew Sam. Is he your brother, Sam Zell?
Well, my dad's name was Sam Zell. He's deceased now. May he rest in peace. But Sam Zell, the other Sam Zell who recently passed away, my dad was in Chicago O'Hare Airport. He used to travel. He was with a big jewelry company growing up, and then he became an entrepreneur. And they paged Sam Zell over the intercom at O'Hare. So he picks up the phone and says, "Well, this is Sam Zell." And they said, "Well, Mr. Zell, your limousine is waiting for you outside the airport. We know you're here. Can you come out?" He said, "Sure, I'll come out." He's like, "I don't know, who they're talking about." He goes out, and then he finds out that it's the real Sam Zell, the one with the multi-billion dollars of assets. He was an amazing man, by the way. A great philanthropic mind.
Such a cool story too. I think there'll be a movie about him for sure at some point.
I don't know if there'll be a movie. That might be kind of boring. Maybe you and I would watch it.
That's what I mean. Like the Art of the Deal kind of a movie,
He was brilliant. He really was.
Yeah. So cool. Well, now when I saw the name, I was like, Wayne. Oh no, it's Sam. Okay. I was like, well, I got that. And then he had passed away too. So, but yeah, I would love for you to turn to a page in your book. When I saw the tabs, I was like, I want to hear something from your book, like read from your book, something that you think is like the most profound thing in your book. I think that'd be pretty cool.
The most profound thing in my book.
On the spot, I guess.
There's an executive summary in the front of the book, and I did that for the entrepreneurs. In fact, a friend of mine who is a professional executive coach reviewed my book for me, and he said, and he reviews books for a living too. He writes books and reviews books, and he said, you have an executive summary, but it's in the back of the book. You should put it in the front. He said, entrepreneurs aren't going to read the whole thing. They're going to read the first 23 pages of the executive summary. So the executive summary is kind of cool because it does basically cull down 400 pages into 23 pages. And so you're not going to be able to understand everything that's in the executive summary without flipping to it. But the way the book is organized, it's got, you can go into a deep dive of a technical topic and just dig into that. And it's highlighted specifically for that. Then I have a comprehensive example that talks about this guy, George, who's got a daughter, Hannah, and they they're throughout the book. So every chapter has a piece on George and Hannah on how George might handle the situation. So I'm not going to cover that, but I'll give you a quote from the book, because I think this is a really important thing for all entrepreneurs to think about. You should identify and prepare your ultimate exit plan by planning for the unexpected today. Use a revocable trust to own your business and a management succession plan to keep it running. In designing and implementing an exit plan that suits your business, consider the following. And there's just 3 bullets. 1, the revocable trust will allow you and your family to avoid the delays and costs of going to court, probate, to gain access to your assets and control of your business. And then the MSP, the management succession plan, if properly linked to your estate planning, will allow you to anticipate the unexpected by constructing a short-term plan to run your business if you die or become disabled, and a long-term plan that will ease the burden on you and your family and your employees by giving them a roadmap of what to do and who should implement the plan if you're out of pocket. The ultimate business succession exit plan should combine short-term and long-term plans if the unexpected happens to you, with a thoughtful long-term exit plan suited to your business and your desires. I mean, I have sold over 160 businesses in my career and continuing to do it. We'll probably sell 4 or 5 this year, maybe more, because I've come in touch with another entrepreneurial group that is looking for somebody to represent the sellers of these businesses across the country. And it's an opportunity for us to do maybe 20 or 30 this year. So, wow. Yeah, I mean, entrepreneurial as a lawyer, but helping entrepreneurs exit properly and make money.
Yeah, I got into the business world. First of all, that's a great summary for where people need to be thinking about. Like, you know, it's kind of like life insurance in a way. Like when you start going down the road, it's like, yeah, when I die, like, who cares? You know, that's the mentality of a lot of entrepreneurs, unless they have family and they really think about it, right? Yep. So a couple of things. One thing is, I went down the rabbit hole of biz buy sell and calling entrepreneurs and you know, their EBITDAs and their books being a mess, but I still love it. Don't get me wrong, I still love going through all of it and finding the needle in the haystack, if you will. But it's always more risky than multifamilies, in my experience. And
so you like multifamily real estate, and that's what your focus is on, and that's good. But everybody likes multifamily real estate, and everybody's getting into multifamily. So the space is pretty crowded right now.
That's true.
So be aware of that. I just talked to another guy. He has a podcast out of Hawaii. He had me on his podcast last week, and he does multifamily real estate investment. And it was interesting, you know. So there are a lot of you out there, and there's nothing wrong with it. It's just find the right property in the right location for the right price.
Yeah.
And, you know, treat your tenants well and treat your employees well. That's the key.
And cash flow. Yeah. There's so much there. I appreciate you saying that. Yeah. Cause a lot of people will think, you know, I just got to get that one business, or I got to buy that next business. And, you know, and it's true. Warren Buffett is a great example of buying businesses and investing early and growing them. But I want to ask you, and I want this to come across in a way that's not offensive. Okay. But I think it's helpful for the viewers, for the listeners, because I myself, I know a little bit about what you're talking about. I'm not at all an expert, but I'm on the same page. I'm all in on what you're talking about. But that's a minority. Most people have no clue about the taxes. And I'm not trying to disparage anybody, but when we hear about taxes and we hear about laws, we're like, okay, these are just things you made up, Wayne. You made these up, or your industry made these up, these different structures, so that we have to pay more money. I know that's
funny. I find that hilarious. I'll tell you what I do. I deal with the U.S. Congress that made these rules up, and these rules are created by our governing bodies, not by the lawyer. The lawyers may be in the governing bodies, but the Congress makes these rules. And
Yeah.
so taxes, unfortunately, are I agree, they're overly complicated, and these structures can be extremely hard to understand and extremely hard to explain. I was on the phone with an entrepreneur client the other day who is in the business of representing multifamily housing developers.
Oh,
He's got
wow.
a multi-million-dollar business, a fantastic business. And I'm trying to explain to him an estate planning technique that's going to yield millions of dollars of savings for his family if he and when he dies. Okay, millions, many millions of dollars. And it's a very complicated structure. And even then, the IRS could come in and audit us and say, we disagree with this and we disagree with that. But you have to understand that my career has been designed and continues to be designed to develop structures to defeat the IRS, which is the IRS is a function of the US Congress. So all laws that were created dealing with taxation start with the Congress, and then they get interpreted by the US Treasury and the IRS, and then the IRS applies those laws and tries to go after quote unquote tax cheats. My job is to come up with a solution so that you can save money legally, not illegally, and not
Right.
through some kind of cockamamie scheme. Because I've seen a lot of promoters do some really bad things when they're promoting these tax schemes. They'll even quote unquote patent them. And I find that to be a little bit offensive because, really any good tax lawyer can figure out what they're doing, and they don't trademark it, and they don't, market it and, charge massive fees for that. But it is expensive because it does take time to understand all this and then to apply it and then create the structures and then do it the right way so that if you are audited, you'll withstand the audit and defeat the IRS. My whole life has been centered on defeating the Internal Revenue Service. So I hope any IRS agents that are listening out there, they're listening carefully, and then they're probably going to audit me, but I'll be fine because I've done everything legally.
You'll be fine. Yeah. I love it. The other thing too that I find interesting about this whole thing is when it comes to this is understanding money. You said business is really accounting, right? Understanding money, understanding how it works, understanding how to keep more of what you make, and then protecting yourself afterwards. And I think it's something that we ignore as entrepreneurs. We're like, how to go make more, not necessarily keep more, and how to invest it. So what would be your advice to somebody who's maybe just getting started? How could they get started on the right foot?
You can overdo the planning at the front end and spend too much time on the planning and not enough time on the implementation and execution of your business plan. So I'd say if you got a business plan and you think it's going to work, start doing the business plan, start executing on the plan. As you go along and as you grow your business and start hiring employees and contractors, and you start doing business with multiple clients and you start growing the business, get your attorney involved, get your tax attorney involved, get your CPA involved, and do it on an annual basis. Sit down with your team. Your team should consist of a certified financial planner, financial advisor, an accountant, an estate planning lawyer, an insurance expert, because insurance is necessary if you have a family and you want to protect them in the long run and protect your employees too. So there's a whole team of people, and there's a whole section in the book that talks about the rock star team that you want to assemble as part of your exit plan. As you progress, that plan is going to morph, and it's going to be more succinct, and it's going to be more focused. And you may bring in new professionals because your old professionals may be outgrown by the size of your business and the size of your plan. I mean, sometimes a business is too big for me to work with because I have a small firm. And so we'll bring in a large law firm that has multiple disciplines. Yes, they're more expensive, but is it worth it at a certain point to do that? Yeah, absolutely. And I'll be the quarterback in a transaction. For example, I sold a financial advisory firm back in 2020, and they sold for $71 million. The transaction was too large for me to handle and my small firm to handle by ourselves. So I brought in a big law firm. They had expertise in the areas of securities law in the Investment Advisors Act of 1940, which is a really important component of a financial advisory practice. And they also had, other experts, corporate tax, that could back me up. I was the interface with the client so that the client felt comfortable that all their questions were being asked and answered properly by the law firm. We brought in a big CPA firm to help with the calculation of the numbers because their CPA firm was too small. And it worked out really well. And the client was ecstatic and they were really happy with me. Other times I'll do it myself because the transaction's not quite large enough to justify bringing in these outsiders. A transaction of that size often really requires that you bring in an investment banking firm. And because the investment banking firm may be able to generate the highest and best value for you as a seller, depending on who you're selling to and what the size of the company is. So all of these things really depend on the size of your business, the industry that you're in, who you're going to sell to. Are you selling it to your management team? Are you selling it to family members? Are you selling it to a private equity firm, a strategic buyer? All of these things we talk about in the book in depth, but it's not like I can do every transaction. I know what I can do well, what I can't do well, I'll bring in outside help. And that's just good, smart advisory services.
Yeah, I like that. What are a couple of things that you think that like business killers, like that you've seen personally, that people just the business is going well, it seems like it would be successful, but they have some issue that, what is it that kills business?
One of the biggest business killers is not planning for the unexpected. So if you don't have a trust to own your business, to avoid probate, and link it to some kind of succession plan that even just deals with your incapacity or your death, that's a business killer. Because who's going to run the business? Your spouse, who's never set foot inside the business? Your son, who's out, being a rock and roll star? Who's going to run the business?
Yeah.
And who's going to own it? Well, your family's going to own it if you own the 100% of the business. So the question is, how do you get these things to work together so that there's a plan? I'll give you a quick story. It's an intro in my book. I knew a guy, he was a government contractor, and he was just starting out his business. He had been doing it for about 5 years, but he was up to about 15 million in revenue. And he was a diabetic, and he died unexpectedly when he went into diabetic shock, fell backwards, hit his head, and died. His son, who I knew who was a young kid in his 20s, gives me a call and said, "Mr. Zell, my dad just passed away. What do I do?" So we basically circled the wagons. We went to the funeral. Everything was very sad because he was only 55 years old. And we said, here's what we do. Fortunately, this guy was smart enough to have had a couple of minority investors who were very informed and knew about his industry. So he brought them in as advisors already. So he had a board of advisors. We took the board of advisors, we took the family members, and I participated in a board of directors. We created a board of directors. The next thing we did was we talked to his second in charge, his CFO, and we found that she had been taking money out of the company without anyone's permission. So we fired her and we brought in a whole management team to run the company. We brought in investment bankers to tell us what their evaluation of the company was. And long story short, 3 years after he passed away, they ended the year at around 17 million in revenue. We brought in the management team. 3 years later, the company was generating 54 million in revenue. We sold it for 30 million. The investment bankers, when they first came to see us, told us, you'll never get more than 10 million for this company. We sold it for $30 million. The family was ecstatic. The investors, the minority investors who helped us build this structure, were ecstatic. Wow. And I was ecstatic because I was able to help the client yield that kind of benefit. So, the story is you got to do your planning up front for these types of events. Even if you're just starting out, who's going to run this business? And so the lesson learned is you've got to have a plan. And even if it starts out fairly simple, you can run into all kinds of problems if you don't have a plan. One more quick story. Had a guy, still a client. He has an electrical contracting business. here in the Washington, D.C. metro area. And it's done extremely well, 40, 50 million in revenue. He's 100% owner of the business. I said, man, you need a management succession plan. He said, a what? I don't need anything like that. If I die, my second wife will take over the business. I said, how much familiarity does she have with the business? Does she work in the business? No, but she'll take it over. She'll know what to do. I said, what about your employees? Are they going to be comfortable with her coming in and telling them what to do? And are they going to leave? What incentives have you provided to them to stay? So we built a management succession plan. We built a board of directors to whom the employees who would become the executives would report. We told the executives what their day-to-day operational flexibility was and what they can do and what they can't do without board of approval. And then we had a board of directors overseeing them so that if something does happen to him, this plan pops into place. His wife will be on the board, but she's not going to have the ability to fire everybody tomorrow, because if she did that, the employees would leave and find a job elsewhere. And so you've got to build this thinking about the people that are working for you and your situation. And again, if you're an entrepreneur just starting out, I wouldn't say you need to have this right away, but a couple of years down the road, as you start generating revenues, $1 million, $2 million in revenue, you start generating profit, even if you're just by yourself. What's your succession plan? One more quick story. I got a client. He's a friend of mine. He's a lawyer, but he stopped being a lawyer and he started running events for the securities law industry. Very successful events. He makes a lot of money, but it's just him. He does the event planning. He does the hotel organization. He does, makes sure that the audio visual is connected and everything is done right. He hires the speakers. He does everything, and he makes a lot of money. I said, what do you think this business is worth? He said, I don't know, a few $1 million. I said, what happens if you die tomorrow? He said, oh. I said, who's going to run the business? He said, I guess I'll just shut it down. I said, why would you shut it down? If it could be worth a few $1 million and you could have that money go to your family, wouldn't it make more sense to bring in somebody to start transitioning the management of your business to this somebody and teach them the business? Yeah, you might have to give up some of your profit. You might have to give up some of your ownership to do that. But don't you think it's worth it for the long run? So these are the types of things that I'm dealing with all the time.
Yeah, that's great. That's interesting. So I'm curious, because you're a business guy, you know all about you deal with different businesses and valuations and stuff like that.
Yep.
I've only dabbled in it. I've mostly built my own businesses and then invested in real estate. I was told that a good amount to pay for a business that is for sale is between 3 to 5 multiple. That's like what you're looking for.
That's ridiculous. That's ridiculous.
No, I mean, if you're trying to buy,
that's a ridiculous overgeneralization. So let me give you my response to that, other than saying that's ridiculous.
Yeah.
Every business is different. Every industry is different. Small businesses, yes, they trade at multiples of the seller discretionary earnings, which is something a little bit close, but not the same as EBITDA, earnings before interest, taxes, depreciation, amortization. If you're big enough and you have a transferable business with people working for you, then that business might attract a multiple that's higher than what you would get if you died and you were the chief cook and bottle washer of the business. So what you have to be careful about is when you're investing in a business, and let's say you've got a one-man show, that one man better stay with you if you're going to be purchasing that business from them. And the purchase price that you pay may be 3 times the earnings, maybe 10 times the earnings, depending on what it is. But whatever you're paying, you got to make sure that you've got a management team that can transfer the value to you so that you don't have to be paying for something that you're not going to get the benefit of down the road. So it's not just the price of the business, it's the structure of the purchase. And so how much do you put down? How do you finance it? How do you pay it out? Under what circumstances don't you pay it out? Those are all relevant factors. And valuing the business, there's an old chapter in my book on how to value the business. It's chapter 3 of the book. You want to read that chapter because it tells you some of the things that, I heard a guy just sold his business for 5 times EBITDA. That means I can sell it for 5 times EBITDA, right? Maybe, maybe not. It depends on your industry, depends on your business, depends on your management team, depends on your contracts, depends on your suppliers, it depends on your customers, depends on a lot of things. And it depends on your value drivers, which we talk about in the business. What are the things that drive the value of the business up? And just because Joey sold his business, which is very similar to yours, for 5 times EBITDA, doesn't mean you can sell it for the same price, and doesn't mean you're going to get the same price for it. And so often what we'll recommend is that you bring in a valuation firm to appraise the business on a sale today, not a sale tomorrow. Sale today. What's it worth today? And then as an exit planner, we try to figure out what the value gaps are and what you need to fill in over time so that you can get to that 10, 15, 20, $30 million exit, whatever that's going to be. And so I think the biggest mistake that people make is overvaluing their business based on some metric that has absolutely no bearing on their business today based on the facts of their situation. So best thing to do is to figure out, what do I have? What don't I have? What am I missing? And what's the value today? And where do I need to get to feel comfortable so that I can sell it or retire? That's what exit planning is. It's figuring out what my business is or my business is worth today and what I borrow so that I can just retire and do whatever I want to do and not have to worry about it and leave money for my family too.
So do you think it would be fun to go like do a case study real quick?
I've got about 3 minutes to do the case study because I have to run to another appointment, but
All right.
go for it.
All right. So real quick, because I think anyone watching who has a business might be able to do this in their head for their business. So the business is making about profit wise about $30,000 a month. So it's not a whole lot, but a decent amount. There's no overhead, literally no overhead.
What is the business?
It's an e-filing company.
Okay.
So they e-file directly with the courthouse. That's one part of the business. I have a separate business that runs a service.
No. We're talking about one business. Go ahead.
Yeah. And but I have a partnership with a third-party vendor who builds the stuff, and they get paid before I do. So when I get my money, it's about $30K, and then they get to keep. So my question is because I have an agreement with them as being the technology partners. Could I sell that? Got
to look at your contract. The question is, do you have the ability to assign that contract with the technology company to a third party without their consent? And if you have to get their consent, what kind of payola are you going to have to give to them in order to allow for the consent to be given? Big question on that one.
And then the evaluation, are there other factors right away that you know of?
Yeah, I mean, you're beholden to a sole source of supply. If that company goes under, what's the value of your business?
Right.
What is the replacement technology? What would it cost to replace the technology? Are there alternatives to what they're doing for you? And if there are, can you diversify and use somebody else besides them to do the e-filing?
Yeah, I've thought about that too. Yeah. Okay, cool. Yeah, I appreciate that. But there's many different business types out there. I've looked at restaurants and stuff too, but I'm going to get your book.
A restaurant. Don't do it.
I know. Everyone says that. But they sometimes sell for pennies on the dollar, and the cash flow is so enticing,
Yeah, cash flow can be good, but for COVID and things like that. So you got to be careful.
Right. Well, listen, I know you got another meeting you got to get to, Wayne. I appreciate you coming on. How can everybody reach out to you and keep up with everything you have going on?
Yeah, there's 3 ways to reach out to me. One is going to our law firm website at zelllaw, ZELLLAW.com. You can also reach me at Aspire, ASPIRE to exit, Aspire to exit at .com. So it's our exit planning website. And then I also have an author's website at WayneZell.com. So you can learn about the book and see some of the handouts, and you can actually access them for free through that. So WayneZell.com is the author's website. And there you can either buy the book or you can buy it on Amazon. And if you do buy it on Amazon, give us a nice review, 5-star, of course, which we greatly appreciate. We're hoping to sell 1,000 books this year, and that's one of our goals for the year. So
I tell you, anybody who comments below, I want a book, I will buy a book for them. Okay. Help with the goal.
Well, go to waynezell.com. Just let us know. And when you come to the website, we just make sure you let us know it's you, and then we'll give you a discount.
Yeah. Awesome. Great. Thanks so much, Wayne. Appreciate you, and take care. And
Mighty Mike,
live mighty.
Thank you so much. I appreciate being on your show today. I really do.
We'll have you on again. We'll do some more case studies. I think that'd be helpful.
I think you're right. I think it would be a lot of fun too.
All right, brother. Be safe out there.
Take care.
All right, you guys, you've been out there crushing it. Go out there, build a business, but think about what's going to happen after you die. I know it's hard as an entrepreneur. You just want to focus on the here and now and go after all your hopes and dreams, right, and stuff. But think about what that business, it's like a child. You want that child to continue to live long after you're gone, especially if you have a family that's counting on you. So thank you guys so much. Subscribe. Hit the like button. If you guys are on the podcast, of course, you got to leave reviews. That's what the podcast platforms are based on, is reviews. And thank you so much. You're the average of the 5 people you spend the most time with, and you just hung out with probably one of the top tax attorneys and entrepreneurs in the country, Mr. Wayne Zell and Mighty Mike, the podcaster. See you guys soon.
For more great content like this and your chance to win cash prizes each week live online, visit www.mightymikereed.com. That's www.mightymikereed.com. Don't forget to subscribe, rate, and review on your favorite audio platform. Until next time, take care and live mighty.